Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thank you. How are we doing in YouTube? Thanks, Julie. Thanks, everybody. Thanks for visiting the Trader Lab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. In addition, there's a library of webinars that explains and shows this process, and also streams that have been recorded up to 5 hours of real-time narration if you're inclined. One of the things about trading is it is not a mechanical process. It is very much more a behavioral process, the behavior of the participants. This is what the auction is all about. The purpose of the market is try to figure out what's the market worth, what's the value. And the only way it can discover value is finding what price is too high, what price is too low, and what becomes fair. It's the same as how your shopping works in a supermarket. If the price is too high, you won't pay it. If the price is too low, it's on sale, and you'll throw more in the cart, but the sellers will not keep the price down there. They will bring it back to equilibrium so they can generate the most volume, and that's called the retail price. In the trading environment, since we're in short time frames, if you will, that process is happening from several seconds to hours to weeks to months to years. That's called fractals or time frames. So using that as a process, then it is, how do you put these pieces together? How do you integrate, quote, multiple time frames? How do you develop a business plan to actually navigate a random environment? The process that we use in the Trader Lab is based on the auction, or how the market works, why it does what it does, and how you can at times get in alignment with it with structured trades. In addition, the overlay of this process is on top of gaming theory. In other words, how do casinos work? They only work and play games with a statistical edge, yet they're in a completely uncertain random environment as far as the outcome of any individual interaction with the gamblers. So if we can use a successful business model and model trading after a business model that we know works, maybe then we have the potential, if we can get in alignment with structured trades, which are similar to gaming or blackjack or roulette or anything else, or a slot machine, but we're the house, doesn't that potentially put the odds on our side of the table versus sitting with the gamblers? And that's what this is all about. Now, I'm going to move as fast as I can. We have a lot to talk about today. This is a special stream, and if we can put it together and cover things clearly, I'll make it public. Otherwise, it'll be like all the other streams that are in the Bookmap Discord Trader Lab community. They will be private and only for Bookmap Discord participants. And you're all welcome. There's a link in the bottom of YouTube. Now, grab a pen and paper, take notes, be willing to observe, focus, be here now. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, it's not a trade calling room. If I get to real time, we'll talk. But there's a lot of rotations today, so I'm going to be focusing as best I can on triggering structures, trade management, structured trades. I hope that'll do it for you. The structured trades look like this, so you can see them and reverse engineer them. They're available to everyone at no cost, and you can use the link if you're in the bottom of YouTube. Explanations, ideas, things you can look at and ponder. Now, let's get going. This is the Bookmap Discord Trader Lab community. Just so you can see, there's a lot going on. Charts posted, interaction. mutual support. You're all welcome to this. There's no cost for it. It's a great team, and this is a team effort. It's serious traders. Our senior trader has over 50 years experience. I've got 45, both professionally and like you, sitting out here in the ether, and there's a lot more. Plus, all the other education that's available at no cost in the Bookmap Discord Trader Lab community. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, and much more. This is called a composite chart. It is based on the volume profile, and what you see is what this is. All this is representing is volume. Volume is important. So let's talk about this. This is the election day. This is the gap after the results of the election. This is a consolidation up here. And this is called the micro composite volume point of control. It's important you understand higher time frame elements because it's all generic. What this is saying, in this consolidation, this is the retail price, fair price. If we open and it becomes too high, remember shopping, I'm not paying that, we can sell off. When we come out the low of this consolidation, it sets up testing this price, which is around 59.60-ish, but we gap under it, breakaway gap. What is the next support level here that was too low that we gapped out of? Right here, 58.76. We gap, breakaway gap under this retail price, think shopping, and we come here, too low. What happens here? Inside day. And we know there's buy stops here, sell stops here, and potentially too low. Support, retail price. What was too high? Retail price. I'm not paying that. Yeah, but it's on sale. Multiple time frames. If this is too low, we have an inside day. Now let's go a little further. Underneath these lows are sell stops. Underneath, above these highs are buy stops. So you have like a little triangle thing going here. And what that is compression or consolidation. And what is an inside day? It's, I don't know. By that I'm saying is the market's in equilibrium and one side's going to be wrong. So let's look. Market opens. We go down on this day. This is day before yesterday. What do? Too low. What's under here? Sell stops. We take them out. Thanks for playing. Look forward to the broker sending you a gift basket. Then what happens later on in the session over here? If the market takes out the longs and now we have shorts, we hit support, and now the shorts that are in this leg become the buyers. What do here? We take out the shorts. Both sides are equally abused. Thanks again for playing. And the target for this day was here, and it didn't get there, 59.59. Now you're going to see how all this works. Yesterday, what do? We have an inside day. Who knew? Yesterday, we were playing the shorts, if you follow the stream, and the goal was to take this out. This is not a strong low. It's a weak low. And this is not a recommendation. I anticipate we're going to take this out. Now, I'm spending time in the higher time frame. Yesterday, what do we get? Inside day. What is going on? Playing the shorts yesterday. Didn't take this out. That was my target. I talk about this in the stream. Didn't do it. What are you doing? Now what? We come across the range. All the shorts that are in this in the morning become the buyers. They get squeezed. Now, let's come to today. Now, I'm showing you this now in just a broader stroke. So this is yesterday's inside day. This is the naked volume point of control. In other words, too high, too low. This is the retail price from yesterday. This is the retail price that hasn't been checked from this day where we had the gap and the breakaway. And we gapped under it, so it's still open. Now, here's another piece. 59.66-ish, 67 actually. And what it is a low volume node in a higher time frame. It's important. because what it's doing, it's bracketing this volume and separating all of this volume. So it's a low volume area. Now I'm going to just show you a little clearer. You can see it here, okay? Right there. So it's 67.25. Now this red line is on the price map before today opens. This is on the price map, 59.20, before the market opens. Just to show you that I'm not making it up. 59.20 before the market opens and 67 before the market opens. I got to do this because this is auction market theory. I don't use any indicators. I'm not saying that's good or bad. I'm just saying that's it. Why not? What is the indication? The indication is participant behavior. Now let's get into real time. Now, if you have questions, ask, post, and I'll do my best. How are we doing in YouTube? Everybody conscious? Please give a thumb up, a like. This is different. This is auction market theory, and this is Trader Lab. Let's take a look. Okay, RTH open. Here's some statistics for you. First of all, that high volume area around 67-ish, right there. The ETH high, right there. Let's look at these levels again. Naked volume point of control, the thing that we jumped over. Why am I spending all this time? Why doesn't he get on with it? Because if you don't understand why, you're just wasting your time. 59, 59, 59, 60 is that naked area. So all these levels, I just want you to see how they're on Bookmap. This is the 60 level. So I have this, I have that low volume node in the higher time frame, I have the ETH high, and we have a probability of getting here and going north. So, and this high in the ETH is made before the RTH opens. Now I'm going to go to RTH open. This yellow line is called the developing volume point of control. This is the retail price. We're opening near the ETH high, and we have the potential, that's all you got in trading, to go higher. I'm opening at this low volume area, and the market can oscillate and either go north or, of course, break south. So I'm looking for the first trades. I'm going to show you the first trade. Now, these are structured trades. They're available to everyone in those 60 PDFs. And there's a link in the bottom of YouTube if you're inclined. Also, there's the Bookmap Discord Trader Lab community, which is a serious community of like-minded traders who come together with all methodologies, experience, and etc. To leverage their collective experience. And the thing about the Trader Lab is it's about the business of trading. You know, it's serious. So, you know, this is about business. So if you're interested in the business, potential career path, that's what Trader Lab is all about. That's why I've agreed to do it. Because what we think trading is and what it is potentially are quite different. So RTH open, let's go. And I'm going to try to show you a lot of different things today. Trade management structure, triggering structures. I will be showing you structured trades. I'll also be showing you some advanced processes that can be developed once you master the more, and I don't like to use the word basic. To me, they're basic, but they're only primal. They're not basic. This is an advanced program in trading. This is not your regular indicator-based looking for red light, green light that most retail traders look for. Most retail traders believe it's a matter of multiple time frames, multiple indicators, and that somehow now you have an ATM in the basement. The problem with that is most retail traders don't succeed doing that. And the other part is you'll have random winnings, and you don't need an indicator for random success, but you don't have an edge. The casinos played games where they win from time to time, but go out of business. We wouldn't have any casinos. That's what happens to most retail traders. Now, you might be different. We all think we're special, but I'm going to tell you, human nature and behavior is pretty common. So let's look. So right here, I'm looking at this. I'm at a location. This is called developing volume point of control. It starts at 0. It resets. Whoop. Wait a minute. Not there yet. At 8:30, RTH open. Let me just get this. Okay, RTH open is right here. Let me just open this up so you can see it. Okay, so RTH open, and you'll see the volume start coming in. And this is showing the volume on the chart. So whatever's in this window is over here. This is the volume delta. It just shows me I got the buyers up here. Same thing you're seeing here. Sellers are over here. RTH open. Key location, low volume node. Low volume is not a wall. It's an area. And when there's low volume, we can pop through it. And then we see what happens from there. Developing volume point of control. Resets at 8:30 RTH, my Central Time, and now we're off to the races. Let's watch. Now, my first trade was a long, and you'll see it kind of worked, and then it didn't. Let me show you. I think, where did I take it? Here, 20 seconds in. Actually, where was it? Yeah. So I'm looking for, statistically, I have a couple of things. This was my support area, or actually that price that was open. Let me show you the auction here, if I can find this. $59.60, and then $67.68, right? 60. Whoop, it's the wrong place. I think it was here. So right here is the area I'm looking for a long, because my idea was if I come down here, I have the potential to come across the range, get here, get scaled, and then I'm looking for it to get through here, and I have a high probability statistic up here. So that was my first trade, and you'll see how this turns out. Not so bad, but not so good. Actually pretty good. So what is this? If you follow the stream, this is called a variable high volume node. I made these terms up when I started doing this. These terms did not exist. And I started with this back in the mid 80s, before some of you were probably born. And I originally learned something called market profile, which was a time-based process from Peter Stottlemyre, who created it. He was at CBOT. And so I met Peter, and he started, licensed it, and market profile kind of came out into the public, eventually got public. So I learned it early on, mid 80s. Anyway, what this is saying, and I developed a lot of this myself because this didn't exist. Too high. So think of it like shopping. I'm not paying that. Here, high volume. I'm not paying that. So the shoppers are going, nah, too much. I'm not paying that, and we break away. So what I know is, think of this like support and resistance. This price was too high. I'm going to label it. I call it a variable high volume node. Again, I made them up. I don't know. So you make things up when nobody else is doing it. And again, if somebody else was doing it, they didn't tell me about it. So now this becomes a variable high volume node. And what it is I'm tracking the migration of the volume. And if I'm thinking instead of indicators, I'm interpreting the language of the participants. I am the indicator. What is your indicator? An interpreter of something, right? I'm doing the same thing, except in my brain, instead of looking at a lagging, conflicting indicator, I'm looking at the auction behavior, because that's what drives everything, the participant behavior. So right here, I see this. There's two possibilities. I can break down or I can come up. But what makes this interesting? This is still in the wrong place, I think. Guys, where was this naked Trader Lab? What was the price on this? Was it $59.50 or $75, somewhere like that? This naked volume point of control? Guys? Okay, thank you. Okay, so but it was here. So what this is, when you see this VPOC migration, it's saying this is now the retail price that is too high. This is called the naked volume point of control. It's the same thing, but it was left over from the last time we were up here. It's the retail price. Let's think Russian dolls, fractals, they're inside each other. If in the developing time frame this is coming down, retail price, but in the previous higher time frame, this was left over and not tested. If I come to this area, and remember, it's horseshoes and hand grenades, and I'm looking for a long because I'm thinking, now why would I be thinking a long? Good question. Two things happen. We had that yesterday, pre-NVIDIA news, we had the big squeeze and we closed at the high of the day. What might happen? Well, unless NVIDIA fell on its face, we get the gap. When you have a gap, what do you get if you are long? Something called responsive selling. That's profit taking. So the possibilities are gap, fill the gap, whatever, right? Possibilities. We don't know, so you don't know, except you don't know. Completely uncertain environment. But what I know, because of the auction, is this was a retail price that was too high last, and we had gapped under it. Now I'm coming back and I'm over it. So what is resistance can become support. Does that make sense? So right here, I'm looking. Let's look. Now I'm going to talk trigger. Now this was not easy. Not that anything is in trading. So right here, this is my retail price. This is my support. It's right there. So I see this. This is selling, as you can tell. What do I have over here? Retail, retail. What's happening here? See this delta right here? Why is the market not breaking? You ask. This is order flow. Let's look. Buy icebergs. Responsive selling. Oh, I'm taking a profit. Thank you for the gap. I'm having a great day. Why is it not going down? There's buyers here. Buyers are here. I see my buyers above this. This is now support right here. I get my buyer here, and I'm thinking I got to get long, but I don't yet have structure here. It might be here, but I got to break here. Now I had this, but I see an iceberg. I see the buy stops, and now I come down again. I test this, too high. So watch. I'm coming down here. I think it's going lower, but I have my support here. So I don't take action yet, though the lunatic in my head, I call him Hyde, has FOMO, right? I'm getting that, you got to get long, you got to get long. And then you just blast in right here, and then you'd get stopped out. I have learned over many years of pain and throwing dollars away that I'm better off not getting in a trade than FOMOing into a trade. So if I don't get a trigger, I don't go in. So I see my selling here. Now right here, it looks like we're going to fail and go down, but my location is here. So this is the area I'm stalking. If I got long here, I'd take a stop. Didn't do it. And I thought I missed there. I thought, oh, maybe I should be short. Do you ever have that in your head where you're going, oh, I should be long, I should be short? You know, that's called confusion and conflict. You got to put it in your trade plan. When that thought process is happening, it's a trigger, a conditional trigger to stop. It's like a railroad crossing. Stop, look, listen. What's going on? You have conflict, and you're going to impulse if you don't become conscious of these things. Write that down. Take notes here, guys. So right here, I see this. I'm at my location, and I'm clueless. Here's microstructure. Here's a break high. If I need to clear this to get on the long, I break high, microstructure. What do I see here? I have my buyers here. I had my sellers. I have my sellers here. I have my buyers. So right here, I've got a consolidation. You can see it there. Buyers, I break high. I'm over this. I have my support here. I got long and I chased it a bit. I will admit. My stop is under here. My scale is here. So I have enough range to get risk neutral. This is my resistance, which I opened at right here. And I'm thinking because I have the ETH high, that's my first trade that I'm going to go here. Okay. So that's my next target. And then holding, or up higher back here, looking for this. Okay. So I was looking for that. Good luck with that, as they say. Anyway, that was my first trade. So I come back and I have to clear this because this is the opening swing high. Now, it's not unusual for the market to come down, take out the opening swing, doesn't have to, squeeze out the shorts in this leg, and then continue higher. So it's a trap. The other side of that is, if this is the opening swing low, and I have a location, which at the moment is support, and I take out the opening swing high, and then I find sellers, then I can return here and fall out the bottom. And this is the key level. I know I'm spending a lot of time. I hope you get something out of this. This is Trader Lab. And if you're interested in this, there's much more good stuff. So let's look. Location, going to the moon, Alice. What do we know is too high? Variable, high volume node. Alignment. So I know for me, if I take the opening swing high, which is my resistance, and there's going to be stops here, I got to have buying above this or there's trouble. So let's look. Now, for me, I'm kind of conservative in the sense of what was the last location that was too high? It's here. So if I'm going to scale, my scale is there. It's not going to be up here, even though I have a high probability, and I can't give you a statistic, just behaviorally, that I'm going to take this out. I don't want to wait for that. My job, number one, is alignment and getting risk neutral. Let's look at this. Now, I get my scale, I break high, I pull back where? Watch. Here. Too low, resistance, break high, location, teeth chatter, opening swing high, pull back, support, north. You see it? Watch. Looking good, Lewis. Get here, thinking it's the gravy train. What do we do here? Support. Support. What's this? Now I'm going to get into fractals. Microstructure. I'm now isolating this. Right here, we have an auction. Selling icebergs, buyers are here. Watch. The micro volume, isolation. See this little structure right here? Now I'm taking you down into time frame or fractals. You think of it. I don't use time because the auction is not time-based. It's behavioral. It's how long does it take for these participants to come to a, quote, conclusion on pricing in this time frame. How much time is it? 2 seconds, 3 seconds. Why am I going to use a candle or a 5-minute, 2-minute, any minute? I'm not. I can't. Because the auction is not based on your watch. It's based on the participant behavior. So here's what I know. Resistance, break low. What do I know from here? Support from this fractal. Support. Resistance. Location. As long as I'm above here, looking good, Lewis. Opening swing high. Here. Right there. Take them out. All right, we got you now. Watch. What happens here? Break. What happened? Support. Support. Right here. Break. I'm under this, which was support here. I got this, which is now resistance. No clue. Only in hindsight, guys. Nobody can predict anything. At least I can't. Maybe you can. And if you can, come to Trader Lab. That would be very helpful. So, too high, don't know. Support here. Why? Resistance becomes support. See it? Resistance, there, becomes support. There. Going to the moon. Break. Resistance. Actually, support. I'm sorry. Support's here. Break low. So we take this out. We take this out. Right here, we're under the variable high volume node. Now this I could not react to. So this is a trade management process for me. Now there's two possibilities here. Because we tested this, it's either a short or an exit. And I'm saying it can be either. It's subject to your understanding of market mechanics. And this was the last support. Now I'm going up in time frame. So microstructure, too high, no clue. This was, you see what happened here? How we broke. So long scale, going to the moon, take out the opening swing high, microstructure, no clue, break this, warning Will Robinson moment, last area for a long, break low, possible short or exit. Here, support. What happens here? Well, we know there's stops under here. Are you going to get long? Not so much. What do we have sitting here? This. Watch. Right here is support. Break, test. Right here, structured trade and Trader Lab, short. Now, helmet on. What's going on? Everybody who's long now is going to run for the exit. Yesterday's high filled a gap. Microstructure trigger, Trader Lab. You can see it right here. Follow the concept. If this is too high, support, break, potential short or exit, support, longs were here, stops are under here. I break. Here come the sell stops. Thanks for playing. Counter rotation to where? To here. Micro high volume structure. Remember, we lifted off from this. Now it's resistance. Support becomes resistance. Support, break low, test, short, short becomes resistance. You see it? Post your questions, by the way. I can't look. I'm trying to run through this for you. Now, let's do a little trade management here. Just say it. Now, you have to vet everything for yourself. Microstructure, just showing you. Break low, microstructure, micro high volume structure. You can see them there and there. This is coming off my these green lines are generated off Investor RT, or you can just look at the profile. They're in there. This is chop, chop, chop is a micro auction. Sellers are here, buyers are here, aggressors are here. We get icebergs here, counter rotation. What's resistance? This. Too high, south of the border. Let's keep watching the yellow brick road. What is this? Chop, chop, chop. Let's come back. I'm going to take you to micro. I'm showing you trade management, not a recommendation. Every individual trader determines how close they're going to manage their trade. I have aggressors. Where's my buyers? I don't see them, do you? Microstructure, too high. Microstructure, break low. These are triggers. Too high. Microstructure, break low. Too high. See it? Microstructure, break low. Too high. And you could do whatever you want with these. Microstructure, break low. Too high. I'm not going to mark them. I just want you to see them. Microstructure, break low, too high. Microstructure, break low, too high. Into yesterday's, filled the gap into yesterday's range. Settlement, overnight mid, high statistical probability. There's a data sheet available to all of you in the Bookmap Discord Trader Lab community. What is this? High volume node. Where are we? Overnight mid. Where are we going? Great question. Wouldn't you like to know? What do we have for targets? 59.20. Next on the hit parade and the overnight volume point of control. Over an 80% probability. Past performance not indicative of future results, not a recommendation. Wear a helmet. Too high. Break low. High volume area. Break low. Resistance. Resistance. Break low. Trigger. Break low. Resistance is here. Watch. Where am I trying to go? South. Where to? Wish I knew. Managing the trade. Can I predict? Nada. What's too high? Right here. Break low. Trigger. Break low. Micro high volume structure is there and there. So what I do, I'll just show you mentally and otherwise. What is this? Right there, micro high volume structure. Think Russian dolls. I am going down in, as you guys think, time frame. I am not in a time frame. I'm in a structure because it's participant based. High volume node, break low, too high. High volume, break low, too high. High volume, break low, too high. High volume, break low, too high. There it is. High volume, break low, too high. As long as these structures are holding up, I am okay. Target is here. Target is here. 59.20. Where did it come from? I'm going as fast as I can, guys, because I want you to see how this works. Where's 59.20? Right there. So where was my short? 67.68. Remember? Target. What was the naked volume point of control, which I was leaning on for longs? There. So it was long to there. Who knew? If we got through it, going there. Reject, then what? Shorts, especially under here, under the 59 area. Then where to? 59.20. Then where to? 58.99. Then where to? Maybe out the bottom. Remember, this is a week, and we got longs here, longs under here. Fuel. Now, I don't know if it'll do it today. Not my job, not your job. What is our job? Stay in alignment, follow structured trades, have a vetted trade plan, be disciplined, and don't get crazy. Because if you're not disciplined, you're going to have a problem. So where are we trying to go? 59.20. Why? High volume in the intermediate time frame. Trades over. Or, there's always or this is too high. Watch. Now, trade management. Microstructure. Too high. There it is. Microstructure. Too high. There it is. Trade management. Microstructure. There it is. Too high. And this is all, you have to vet this. I'm just showing you something that you probably don't get to see because this is advanced, guys. This is an advanced process. This is like I'd say an advanced degree in trading, really. And it's not something that you're going to be familiar with because it's different. And the reason it's different is because in Trader Lab, we've all walked in your shoes. We don't want to keep taking that walk. Target. Now, resistance is here. Break low. Notice if you see a change in behavior. Resistance, trigger, microstructure, too high. There's my buyer. My sellers are here. Thanks for playing. Microstructure, high volume. Buyer is here. Resistance, break low, too high. How micro do you want to get? That's completely up to you. Notice where we come. Resistance, too high. I'll put a little line there just to help you see it. Break here. Resistance. Break here. Resistance. Lower. Too high. Microstructure. Right there. Too high. Break low. Resistance. What happens over here? Now, I don't know this, of course, only in hindsight. Microstructure. Resistance. Too high. Resistance. Too high. Break. Going to zero. Looking for this to hold and this to hold. Break low. Microstructure. Here. Break, break. Trade's over right here. Watch. Watch. Trade's over. Now we have a statistical target, the overnight volume point of control. I'm just going to give it to you. Now, subject to your plan, you could be holding for that or be out of the trade. I'm just showing you structure. 79% probability we get here. Okay? This was my target. Actually, this is okay too. But if you're using this, in other words, has a 79% probability. This is more higher time frame. So if you're trailing, you'd get taken out. Now, I don't think that's a big problem. Do you? What do you think? Considering where the short was, which I can't even remember at this point. So this is one trade. And it's from here. What do you think? This is Trader Lab, 59.60-ish to 20s. Or you get out here, 23. What do you think? Would this work for you? That's almost 40 points on one trade. And what I haven't discussed with you is ads, scales, rotational, advanced, okay? So we're not going to go into that here. But in Trader Lab, once you get the understanding and you can read it and let go of your need to be certain, when you say to yourself mentally, I'm looking for confirmation, there is no confirmation. It's uncertain. The casinos, if they waited for confirmation, they'd never deal one hand. They have to accept uncertainty. And that's not our nature. We're wired to avoid uncertainty. This is the big conflict we face in this business. You will learn about that in Trader Lab. You'll also learn processes to manage it. And of course, that doesn't mean you'll be able to, because trading is definitely not for everybody. But I can suggest if you're doing what most other retail traders do, you might maybe reconsider that if it's not working for you. So anyway, let's keep going. VPOC migration. Now, do you have questions? Before I continue, I'm going to look up for your questions. Hey, please give a thumb up. If you can't find the PDFs of the structured trades, go to the Bookmap Discord Trader Lab community. You got to use the link in the bottom of YouTube. You got to verify your username and email address so we know you're not a spammer. And then you can access all of that in the Bookmap Discord Trader Lab community. Also, there's that library of webinars which can guide you. Some of them up to 5 hours long of real-time narration. So you can see this unfolding as it goes versus me showing you how it works. I kind of think the value in this is you seeing how the market works. It is not your indicator. And I want to clarify, I'm not against indicators at all. If you don't know how the market works, what good is an indicator going to be for you? If you understand market mechanics, then maybe you can use an indicator more productively, because then you understand a priority of inputs. The indicator multiple time frame approach with indicators creating conflict in variables, in my opinion, is not how you do this. But then again, that your mileage may vary. So we get to, let me show you. The overnight volume point of control, which is that 79% probability. It's right there. You tag it. I think we got within a tick or 2 ticks. So you either be taken out on trade management or this thing, however you're doing it. Everybody's different. No right way to do this. Now I'm going to take you back into fractals. We got to look left. You always got to look left. So what happened here? This was too high. It was rejected. So what do I know about this? The shoppers in here would not pay. Now watch. Now this is not easy. Sit back in your rocking chair and not be involved. So what do I know here? This is too high. Let's put a little, what is it? What are we looking at right here? What is it? This is a consolidation, right? Too high, sellers are here, buyers are here. You can see them. That's the delta. And the icebergs are on the other side. We break low. The volume in here, and you can see it there, and of course there, and there, it's all the same, okay? This is what a consolidation looks like in volume. Too high, too low, too high, too low. Retail. And if the shoppers in the store, this is like your store down the street, it's a fractal, or the little store, same thing, shopping, and I break away from it, then the participant says, I'm not paying that. And they got to go down and find what's too low. Well, we find too low over here at the moment. So where was it too high? Here. Let's watch. This is concept. Now, there's another piece. So a couple pieces that are going to come together for you. Right here, we get VPOC migration. Now, I just want to show you something. This was where we broke out. So this is also resistance. Right there, this outside edge. Now, going down in fractal, what is this? Let's just keep going. Now, you're going to say, I can't do that. No, you don't have to do it. This is to show you how the market works. If this was rejected and we come back here, and if I could extend this, but it's too much trouble for me, because I wanted to show you the formation of the structure. This is my test. Now, it can test here also. Not a big deal. And where was it too low? Here. So let's just see what happens. Break low, microstructure, resistance, resistance, trigger. Now, to get into this trade, this is your resistance there. It's the same thing as that. Okay? Now, you might not have an entry. Let's just look at the behavior. I get the overnight stat, I think. No, not quite. Maybe it was hit here. I don't know. VPOC migration. Now, this is saying everything above us is too high. This is the new retail price. Now, pay attention closely. There's two possibilities, of course. And now you're going to always be impressed when I say this. It can go up or down. But yeah, but there's a reason for this. If this is too high, we can keep marching down, or the market can transition into a rotational configuration, which sets up a plan inside a plan. So let's look at this. So right here, if you're short and you're holding, and you could be, it's up to you. So there's a few ways to play this. So let's assume you got taken out on this or wherever you got out, okay, or a trailing stop, you're out. Now what do? Well, if you can't trade this, or it's not part of your trade plan, you just look at this and you're going, what's going on? Many retail traders are going to be chasing the market because of FOMO, because they're in, I call it the hide. When your chemicals are released in your brain, fight and flight, FOMO, you are out of control. And you have to have a circuit breaker in your plan so you can recognize these triggers and when you're susceptible. So that is journaling and also learning about yourself. And most of us never learn about ourselves. We're too busy fantasizing about catching all of this stuff. So let's look. So when I come across, so it's either down, remember I said down or up. When I come outside, then what do I know? There's stops above this swing. There's going to be stops above this swing. And I have my mid and VWAP up here and settlement. So I'm going to start looking for a continuation short. Let's see if we can find it. VWAP right here. So this is a structured trade in the Trader Lab. I'm going to show it to you. Now here's my micro high volume right here. This is a structured trade. That means in the Trader Lab, you would be waiting for this, and then you're going to read the microstructure and the order flow looking for an entry. If you get a trigger, your first job in any trade in Trader Lab is to get risk neutral. That means you buy the stop, and then and this trade, so you know how this trade works? This is the target. So it would be a short, either take a full stop, or you get a scale, which buys the stop on your runner. So the worst that happens is you scratch. So you either take a full stop, you scale, you scratch, or you get the target, which is this. And then if you have additional runners, out the bottom, or not. Watch. So now trigger. Notice the alignment. High volume, exhaustion, sell stops, order flow. Right here, no clue. Let's watch. Micro high volume. I'm going to put a little line for you. It's right there. So in this little structure, which I cannot do anything with because it's developing, this is my trigger. Notice the change. Now I had it here, trigger, but I'm not at my location. What's at the VWAP? Stops. Do I want to step in front? No. Does my FOMO make me do it? Yes. Does my FOMO maybe get me short here? Yes. Am I going to get short there? Not if I'm in Trader Lab and I have a trade plan. I'm going to just sit and wait because there's loads of trades that come by. How about just taking the ones that actually work for you? You take a short here or here. And the better way to do this is to take it against the micro high volume structure. So anywhere in here, and your stop would be there. Above there, I should say. So your stop is, I always give it a couple ticks, so 2-3 ticks above here. So your short could be here or there. That's your short. And you get stopped out. Anybody surprised? Guess what? We all take stops. Watch. So that didn't work. So now I come back to another location. Here. Out here. What is over here? A high volume structure. Same thing. I just got run over here. Okay. Mid is here. I break high. Let's come back over here. Last time I was here, I had volume here. I had volume here. You can see the high volume. And I broke down from here. So this is a swing. This is resistance. And I'm going, what's going on? You ever ask yourself that? I ask myself that all the time. What's going on? And if I can't recognize it, I have nothing to do. So look where we come. High volume node. Now, when I'm here, I have no clue. What I do know is that right here, I see absorption. I see a lot of selling icebergs. And as far as I know, it's going to the moon. What happens right here? High volume structure. And I'm still looking to come back. This is very volatile, and I'm thinking mean reversion. The CLN, the CLN is coming cloud nodes, and it's being exported from my higher time frame software. So it's tracking these levels in real time. So I don't have to be looking and marking them. It does it for me. And you have to have software, other software that actually does exports. Some do, some don't. And then Bookmap can read it. You also can use an Excel spreadsheet and do this also, load them up at the beginning of the day, but they won't update in real time. So this is resistance. And right here, I don't know. So I see my volatility. And remember, I don't know anything. I see my sellers. Now let's go to order flow. And you can get fooled very easy, because nobody knows. I don't know. Like here, I see my sellers. My buyers come up here. I'm seeing my icebergs. Break low. Is this a short? Break low. This looks like a short, doesn't it? Break high. So right here is a suspect, but I'm completely confused. Here. The volume is here. So I have a buyer here, and right here is support. Break low, resistance, break low, trigger. I'm below here. Now let's look at this. Where's my high volume? It's there. My trigger and breakout of the consolidation. I'm just going to show you what it looks like. Now this is again advanced, so I'm not suggesting, anybody do this, of course. I'm having a little problem. What are you doing? So the low is here. And what you're going to look at here is this outside edge of this consolidation, bigger structure. Inside of it is microstructure. I break away. So right here, it can just come back here or break. If it breaks, it sets up a potential short. And then I got to look for a way in. Let's see if I get a way in. This is resistance. I don't have a way in, so I don't have a trade. Let's watch. VPOC migration. What I'm showing you is structure, and if you don't have a trade, you just don't have one. You don't do anything. If you can't deal with that, then this trading is going to be problematic for you. So this was the breakout. Now there's another way into this, and this is more advanced, which I don't like to go into, but I'm going to because I said today I would focus a little bit more on structure, microstructures. This is a trigger. Now there's two places to enter. Back here, up here. So we get this, we bounce. What is this? Micro high volume structure. Let's look at it together. Here, break low. Where's my resistance? Here and. So you got to train yourself really to be able to see structure. So when it shows up, you're anticipating it. So you have this. Let's look what created it. So our buyers are here. The buyers are there. The sellers show up here. The buyers are here. We break. That's a trigger. We pull back here. Micro structure, micro high volume there. That is a short. Now, let's assume by the time you see this and you spill your coffee on yourself, you're going, how do I get in? There. Limit order here or here. Stop here. Can you handle that? Now that's what I do. And I'm not saying anybody should do this because I get run over with everybody else. Don't think you can avoid taking stops. What's this? Micro structure. Where is it? I'm taking you down into micro. This is like the electron microscope. It's not that you trade like this. It's that you learn to read the behavior. Too low, too high. Break low. Where's resistance? There. What happens here? Break low, too high. What happens here? Break low. Where are we going? Maybe down. What do you think? Watch. See it? So I am looking for shorts and my target is below. And what is my target? This variable high volume node. Let's mark it. Now I know if you haven't seen this before, you're seeing all these lines and you're going, oh, that's a mess. Well, I don't keep all these lines on here. I don't. I'm just showing you so you can read the structure. For my trade, my line would be here. I would put one, I would know about this. I don't have to put a line anywhere because I see this. I just am looking at these little nodes. And then I'm looking at the price. And if it's going to scroll off, I may put a line. So if I come back, I don't forget it's there. But when it's happening right here, it's a structure for me to use as a trigger. It's a trigger. And if I take a stop, my stop is here. Or when I break away, I move my stop to there. And my goal is to get risk neutral. The tighter my entries are, the easier, that's the right word, it is to get risk neutral because my stop's going to be where the structure fails, usually 1 or 2 ticks. So I don't have to go too far to get my risk off. So I have to be patient. And it's very hard for us to be patient. When we see this, most retail traders are going to be triggered by FOMO, the adrenaline, the endorphin deal, all that going on, dopamine fix, and enter here, and then their stop is here. Professional trader is going to accept that maybe they'll never get in this trade, but they're going to put their order here or here. and their stop's going to be here. That's a big difference. Do you think you can do that? The reason you might be able to do it is because you develop discipline. Target. Okay? That's just one trade. That's TraderLab. And what was it worth to us? Well, subject to 40 to 22. How many of these do you need? Even though we took a stop here. The stop was pretty small, wasn't it? It wasn't maybe even 2 points. I'll take a 2-point stop in order to have an opportunity. And this trade, remember, was to go from here to there. That was the trade. It failed. Then we got another trade up above, or here to there. Same trade, different location. Are you guys tracking? And what's this? Support. Questions? Hope you're getting something out of this. Yeah, please give a thumb up in YouTube, and I apologize if this looks like madness because it's different. This is an advanced degree in trading. It really is. These are concepts of really, it's called auction market theory, but it's really market mechanics. How does the market work? How can you get in alignment with it? And yeah, it's all random in the sense of the outcome of any time you interact, because nobody can predict anything. So you take the idea of being right and predicting and throw it out the window. Casinos can't predict anything either. They only trade with an edge or play games with an edge. We're in the same business. So if we can accept we're in a gaming business and we can't predict anything, why are we going to try to be right and predict? We want to be right. We need to be right. But guess what? We don't know which interaction is going to give us a pay versus the pay to play, you know. So, and the gamblers get paid at the casinos. The casinos pay the gamblers, including the cocktails and the ticket to the buffet, and even maybe a tickets to Adele. Comp your room, fly you in if you're a big enough player, and they make huge profits over time extracting the dollars from the gamblers, even though the gamblers walk out with cash. Think about it. We're in the same business. If you can reframe what we do to gaming, it changes your need to be right into a need to follow a structured plan that has vetted trades that have a statistical edge, not to look for confirmation in an environment where it doesn't exist. And for you to manage your emotional state is a big issue. Okay, let's come back. So, target. Back to here. So where am I trading? Out. This is called mean reversion. Outside, in. That's the mean. And in a higher time frame, that's the mean. 79% probability to get here. Who knows? Watch. VPOC migration. Too high. New retail price. So what did we do? Retail, more volume up here. New retail price. If it's too high, back here. Reject. Back here. Okay. Where are we going? South of the border. How do we do this? Let's see. Watch. Where's our high volume? Let's keep going. By the way, this mid, you guys know about the mid, right? If we have the mid, look at the structure and yesterday's high. Watch. So we have variable high volume node, resistance. We have the VWAP. VWAP to VPOC is a structured trade. Let's look at it. What happens at my location? It doesn't even blink. It's like, I guess we're not going to take a short here. I don't have a trigger. Do you see a trigger? I don't have a trigger. I don't see anything. Where's my break? I don't have a trigger. So now I come up here. Where's my trigger? Let's see. Where's my break? Let's see. Oh, I don't have a break. Okay, no trigger. Watch. Now, where am I? Mid. Yesterday's high. Watch. Let me look left. Make sure I didn't. Okay. I want to make sure I didn't have a structure over there. So I got nothing. I'm sitting here. I'm going, well, VWAP to VPOC. Next trade. VHVN alignment. This is a location where I stalk a short to come back there. No short, no trigger. Hasta la vista. Next. What's next? here, and here. But the mid, why? Stops at the mid, retail traders, and the trend maybe is down. Let's look for a trigger. Is this a trigger, Tom? There's my micro high volume, break high, support, not a short. Watch, go into the moon, Alice, right? Mid, what happens here? See if this doesn't look familiar. Micro high volume structure. Here, sellers are here, selling icebergs, going to the moon. No clue. Watch, yesterday's high. Coincidence? Maybe. Going higher, going higher, going higher. Support, going higher. Support. Sellers absorb. Buyers going to the moon. Break low. Uh-oh, what's going on? What can this mean? Can this be a short? Where's my micro high volume? Right here. Is that the mid? Break low. So I get this. Right here is my micro high volume. I don't know. My teeth chatter just like yours do because I'm fearful. Are you fearful? I am. Why? I'm wired to be fearful. So I'm fearful. What's the big deal? What do I do about it, though, is what counts. Micro high volume structure. There's the outside edge right there, which is where this is. So you can see where it happens. There's the outside. That's where the buyers were, here and here. And then I come up here, and it's going north. Except right here, these buyers are absorbed. This is order flow. And I break here. This is the trigger. I am now, these sellers have thrown these buyers under the bus. The sellers are below the buyers, and this was my last location where the buyers were active, here. Support. Now, again, in micro. I break low, I'm at the mid, I'm at yesterday's high, and I counter rotate to my micro high volume. So right here, stomach is flipping a little bit. Break low. This is your trigger. Your stop goes here, and you put this thing on. And where are we going to go? We're trying to mean revert, come all the way back. And traders in Trader Lab took this trade. Now, we have to clear the VWAP. So if you took a short here, you got to scale ahead of the VWAP in case we hold VWAP and then continue higher. No way to know, part of the thrill. So in Trader Lab, you got to get risk neutral. So this is where you would get scaled ahead of the VWAP because retail trader behavior, buy the VWAP mechanically, just like sell the mid, except at the moment the trend might be down. So, and we're inside yesterday's range. Okay, so that's the pieces. So this is where you got to scale. And now it's either you're going to get taken out or the buyers here are going to get flambéed and we're going here. Let's see the outcome of the trade. Resistance is here, outside edge. Remember, right there. I'm going to draw a little line here just so you could see it. This is all structured trades. We're looking for the buyers at the VWAP, which is why you got to scale. Just watch. Where's my resistance? Outside edge. This is where the buyers failed here and we triggered. What do we tend to do with triggers? Come back and test. So right here, you have a choice. You're not doing anything and you're just working on your crochet, or you have a level. You're at an outside edge of this little distribution we fell out of. Let's look. What is this, you ask? Let's see if this looks familiar. Let me get this out of here. What's this? Resistance. What's this? Seller. Where's my buyer? Where's my last buyer? Here. Where's support? Here. Where's my outside edge? It's right there. You see it? So my buyers are here. My buyers are here. My sellers are here. Where's my buyers? Where's my buyers? I don't see them. Break. I'm now under the buyers that were there and there. My micro high volume is here. You can see it right there. And my structure I'm going to get all these lines out of here again. I just want you to see structure. Remember, the objective of today's stream was to try to show you structure. Because if you can start reading structure, it's language. So what I do is I'm speaking a foreign language. And yeah, I know it's foreign. It was to me. So if once I understand why this happens, break, the volume is in here and the outside edge is there. I break, that's a trigger. I pull back. Right here, I can take a short if I have that in my plan. And I'm going here. Anyway, big explanation, but you know, you're talking getting short either up there or here. Same trade. And this is more advanced because you got to, for example, if I'm thinking of getting, I know this is I anticipate buying here. That's what retail traders do. And I know if I come up here that I can get stopped out when it squeezes me out. And because I know that, I cannot be fearful about what might happen. Casinos would never deal the next hand if they were fearful that they were going to pay the gamblers. So I know, based on my plan and auction mechanics, that this is the retail price. And the structure has a name. It's called mean reversion, outside in rotational trading. So this is a short, that's a short, this is a short, this is a target. And then you have your helmet on or you're done with the trade. You can have a very nice day if you're in Trader Lab and you're waiting for your trades that have an edge. Now, we have another statistic, ETH low. So we'd be going for the ETH low if you have a runner or not, or you're done here. You see, that's trade plan. Now, let me just go a little further here. And there's other trades here I actually forgot to mention to you. I wrote these down. I want to show you some advanced stuff. Any questions? Now I'm going to go back and show you some other things that are advanced processes in Trader Lab. This is more advanced, more nuanced. But I want you to see what you can learn. Not in 5 minutes, not in 3 months. You want to go to university? You got to roll your sleeve up, make a commitment to a career. You want to become a professional, whether it's an athlete, a surgeon, any high performer in a competitive environment, or you can play a video game and that doesn't necessarily create longevity. A lot of fun, but no longevity. Questions? Okay, let's look. At 8:51, there was a short, and I posted this in Trader Lab. I wonder if this aligns with what I was looking at. Oh, yeah, this. I posted this in Trader Lab, and this, 8:51, didn't know. I said, and by the way, I'll show you the Trader Lab community in a minute. That observe this. Where is it? That absorption right here. Icebergs and potential break and test. Now this is more advanced, but right here is a potential short setting up. What the idea with this is, if it breaks with certain parameters, which we can't see clearly here, but it's right here. If it breaks and we come back for, in other words, this level, this high volume, let me just mark it, and we test this, we can come back, pop it, break below it, it's a short, or we can just short it. Let's look at it. That's a short, but that's an advanced structure. And it's strictly, I'm only isolated. Next one's 916. I want to show it to you. These are just fun facts to know and tell. Very advanced processes, so I can't explain all of it to you. And And I will say in Trader Lab, most traders who are developing, this is not their thing because you don't need this. But as you develop, you will find that there's things you can do. 916, where is it? See if you see something familiar. Yeah, here it is. Huh. Didn't even know. See this? Where is it? It was at 916. This. So this structure here has absorption right in here. We can see the absorption. So that was buyers, and here's what happens sometimes. And again, now, so for me, this was the mid, right? Right there, I have a buyer. Think Pac-Man. So there's a buyer here and a seller here. Who wins? Buyers are here. Buyers are here. We see the delta. I break high, and I'm looking for a break below this. Trigger. Return to it. 916, and it's a short. That's what I was trying. I didn't even know they had, because I wrote it down. I didn't know. Okay, well, that's your short. And there's your test. And then off you go. Okay. Questions, guys. And by the way, there's a link in the bottom of YouTube if you're interested in Trader Lab. It's a community of like-minded traders who come together to leverage their collective experience. It is a serious community. It's about the business of trading. It's about career building. Taking a view of this as a business, not as a video game. And I can assure you, and again, it's just my personal experience. Yours may be different. I always have to say, past performance not indicative of future results. You got to do the work. It's like going to university. It really is. It's not do what I do. Absolutely not. It's do what aligns with your psychology and generate metrics that align, because every trader develops and operates in different time frames. High of the day. How nice. What a day. What ranges. Really amazing. We have targets above, right? No clue. Not my job. Micro high volume. Now, I don't trade the high of the, I don't sell the high of the day. It's not my job. ETH high. We had a high probability of taking out the ETH high or low. For me, I thought it would be the ETH low. Why? We went down. Fail to get to this. This has over a 90% probability of taking out this or the low, and also taking out the first hour's high or low. This is not on my list. Doesn't matter. The change in the behavior is what guides me. I can't predict anything, so I don't predict. I spent many years trying to be right, to be able to confirm, to know what was going to happen. I didn't understand gaming. I thought this was measured moves and prediction. Well, I think it's going to go here. I think it's going, right? Anybody here do that? I did, because that's what I learned. I went to CME and learned classical bar charting early on, 1980. And I thought, oh, you got a triangle, you got a pennant, you got a head and shoulders, it's going to do this, it's going to do that, right? So everything was predictive. So everything I did for years was about predicting what the market will do. And sometimes you're right. That's the problem. But more times than not, the random nature of the market gets you. Even if ultimately it does something, along the way, you're getting taken out, stopped out, thrown under the bus. And you're always trying to improve it. So then you start curve fitting. Does that sound like you? I know it's me. So I kept trying to fix a defective process, and I believed I was doing the right thing. I just had to make it better. And I have to say this to everyone, and I say it most of the time because we're all the same. And the problem with this business is everything works randomly. So the fact that we see it work makes us think it's just a matter of making it better. Casinos aren't trying to make their games better. They accept that they're going to pay the gamblers. Well, if you're in business, you have overhead, don't you? How can you be in a business where you don't pay bills? No, I can't short this. Not my job. So I don't trade against what I perceive to be the trend. I'm not saying you can't. Now I'm above this level, which was important. This was our high, don't forget, here for the day. We took it out, and now I have to start looking above. Now, it doesn't mean if I have a vetted edge that I can't fade, but I don't see what the point is. Do you? In other words, I just don't trade here. I have this and this. Let's look where those came from. It is possible, and that's all I can tell you, possible, that we now, since we're up in here, I believe, where are we? 59.73. So we're up here. If I get above this, and this is the low volume area, outside edge of this distribution. If I can start traveling up, then I have the possibility to come here and maybe even come back here, and who knows. But this is a lot for today. We have what's called a neutral day. And a neutral day has about neutral day means we've taken out the first hour's high and low. And it's about a 29% probability that we'll actually do that. So not so much, right? But the fact we did is a battle. It's showing both sides are really, this is like a major war between buyers and sellers. Who's going to win the skirmish? Well, the buyers appear right now to be taking the ball. So that means I'm not looking to be a seller at the moment, though I can turn at any moment. I'm above the 59.60. I'm above the ETH high, and I'm above all these variable high volume nodes that we were leaning on for shorts. So everything that was the reason for the short, remember this, short in the morning, we're above it. That kind of gets me going, not so much on the shorts, unless I'm a counter trend trader and I don't know if there's an edge. So 60.03, which I showed you just on the higher time frame chart here, and maybe 60.15. Now this is trading in fractals, and I think we had a lot of volatility today. So where are we trying to go? 60.04, 60.15. And maybe squeeze this out, or not, or just come up in here and run out of gas. No clue, not my job, right? Not my job. 60.04, 60.15, targets, not recommendation. This is important that we clear away from this. Otherwise, we may just come back down again. So we'll see. But I don't have any shorts. And if I have no trade, I just sit back. It's already been a very nice day. How are we doing in Trader Lab, guys? Have you guys been having a nice day? Assuming you're following your plan and you actually have an edge, how are we doing? This is what Trader Lab looks like. Let me see. How are we doing in Trader Lab? You see what this is? A lot going on here. Thanks for your posts, everybody. Here, let's try to get down here to the current. Code, all kinds of stuff going on here. Statistics. Thanks for a lot. Thanks, Lucky. Different software. How do you get them to align? A lot of products out there are not really suited for advanced trading like this, but you can tweak them. There's ways to kind of get around and get them useful as a developing trader. Order flow. How do you read the market? I don't use indicators. I'm reading this. Now, it doesn't mean I know what's going to happen. That part hasn't changed. But what is this? Microstructure. What does it tell me? Rotation. If the trend is up, how might I use a rotation? Well, not for a short. Unless I have an edge picking the high of the day. And I'm going to tell you, me, not so much. But this is a selling structure in the micro time frame. It is not a short unless you have vetted it and you are a counter trend trader and you're trading with a scalpel and it's a highly developed skill. I don't do it. I'm not interested in playing around, taking the same risk on this trade, maybe to come here when the trend is up. And if I take this risk, I'm looking for 20 points, 10 points, 15, 30 points, because that's what the market's offering me. Why would I play in here? To do what? To come down to the top of this consolidation? Is that worth it to you? It's not worth it to me. And if you're in Trader Lab, it's not worth it to you either, is it? Are you guys tracking? How are we doing in YouTube? Hope you're getting something out of this. By the way, this stream is available exclusively to Bookmap Discard Trader Lab participants to reverse engineer, screenshot, compare to what you did today, and isolate the behaviors and build out your library and build your statistics. This is all about statistics, guys. How do you manage your emotional state? It's not by making trades up. Oh, I think it's going down. Oh, yeah, but maybe it's going up. No, you don't have a trade. You just sit here and you go, oh, this like counter rotation. I know that's resistance. I know this is support. I know we had a sweep here. Stop sweep, which is typically sets up a potential continuation up. No way to know. Does it matter? No. Resistance, microstructure. See it? No short. Potential buyers here. Sweep, support up here. Not a trade. What is it? Interesting. So what do I always suggest in Trader Lab? Continual narration with conditional statements. If this, then that. If not, then what? If this is too high and I get a seller, if this, then that. That is too high, then what? Then a downside rotation. If not, if I get this and I break high, then what? Then this becomes support and we potentially go off here. Where's my support down here? Now I'm in minutia. It's here, micro high volume, right? There, well, get over here. There, and top of this here. So let's look at the next microstructure. It's going to be there. So what is this? Micro resistance here, micro support there. So this is what it is saying. And the trend is up. So for me, no short. What about you? Is this making sense? Please give a thumb up in YouTube. If you're interested in an advanced process and a supportive community, there is no cost. There's a link in the bottom of YouTube. You do need to confirm your Discord email so we know you're not spam. And then you can have access to the Bookmap Discord Trader Lab community, which is second to none. It is a serious business-oriented community. The library of webinars that are exclusive for Bookmap Discord Trader Lab participants. And of course, me, I'm in there on and off all day. I'm a full-time trader. So when I'm trading, I have one eye on the chat and two eyes on the market. And who knows where the other eye came from. And the other part of it is it's a serious community, but we have fun, but it's not romper room. And there's no holy grail. Guys, don't waste your time looking for the only one thing you need. You go out on the internet, you'll spend the rest of your life looking for, quote, the holy grail. There is none. Otherwise, the casinos would have a holy grail. They don't have one. We can't have one. Please give that thumb up. And remember, if you're interested in Trader Lab, there is no cost. And again, if you do come to the Bookmap Discord Trader Lab community, it gives you access also to all the education, stocks, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, goes on and on and on. And all of that is no cost in the Bookmap Discord server, not to mention the Trader Lab and a lot of other education. Please give the thumb up. Come to Trader Lab. I look forward to meeting you there. Thanks again for visiting us in YouTube and Trader Lab. I'll be there shortly to join you so we can continue together on our journey. Thumb up. And YouTubers, if you want to visit the Trader Lab, I'll look forward to meeting you there. Have a great day. And thanks for visiting us in the Trader Lab today.